What if the next global reserve asset wasn't oil, but a digital token created from code? Imagine a world where the foundation of our economies isn't a physical resource, but a digital one, something that exists only in cyberspace, yet holds the power to move markets and nations. For over a century, oil has fueled economies and shaped global power. It's been the lifeblood of industry, transportation, and even geopolitics, determining the fate of nations and the direction of history. Now, imagine a world where a digital asset becomes the essential pipeline for global value. Instant, borderless, and frictionless. Transactions could happen in seconds, connecting people and businesses across continents without the delays and costs of traditional systems. This isn't just science fiction. It's a real conversation in finance and tech. Experts are debating how digital tokens could transform the way we exchange value, invest, and even save for the future. Oil's value comes from utility. In the digital age, value is about speed, efficiency, and trust. Digital tokens could offer transparency and security, reducing fraud and making transactions more reliable than ever before. A digital asset for instant settlement could become the new lubricant for global finance. It could streamline everything from international trade to personal remittances, making money truly move at the speed of information. The idea of a cryptocurrency as essential as oil is gaining traction, hinting at a future where digital and physical economies are deeply linked. As industries digitize, the lines between the virtual and real worlds blur, creating new opportunities and challenges. As outdated financial systems strain under inefficiency, the race for a better solution is on. The world is searching for a new standard, one that can keep up with the pace of modern life and global commerce. The story of a digital asset powering the world is just beginning to unfold. The next chapter could redefine how we think about money, value, and the very infrastructure of our global society. To truly grasp the XRP oil connection, it's essential to first understand the concept of tokenization. Tokenization is the process of transforming real-world assets, like oil, gold, or even real estate, into digital tokens that exist on a blockchain. This technology is revolutionizing how we think about ownership and value transfer in the digital age. Instead of relying on traditional paper certificates or holding physical commodities, you now have the ability to own a digital token that represents your stake in an asset. These tokens are secure, easily transferable, and can be traded globally in seconds. This shift is already underway. Innovative companies and financial institutions are building advanced platforms to tokenize a wide range of assets, from barrels of oil and bars of gold to shares in real estate and even fine art. Imagine being able to buy a fraction of a barrel of oil instantly, right from your phone, without having to navigate complex commodity markets or wait days for settlement. Tokenization makes this possible, opening up new investment opportunities for everyone. By digitizing assets, tokenization makes markets more accessible, increases liquidity, and brings a new level of transparency to financial transactions. Investors of all sizes can participate, not just large institutions. It also unlocks value from assets that were previously hard to trade, like skyscrapers or gold bars, allowing anyone to invest in high-value items with just a few clicks. As trillions of dollars in assets begin to move onto blockchains, the financial world faces a new challenge: the need for a fast, neutral, and reliable settlement currency that can operate across borders and asset classes. For example, if you hold tokens for oil and want to exchange them for coffee tokens, you need a digital bridge to swap between these assets, without relying on traditional banks or slow intermediaries. This is where digital assets like XRP come into play. XRP acts as a universal bridge, enabling seamless and instant transfers of value between different tokenized assets, regardless of their origin. The XRP oil connection begins with this fundamental need for efficient, global settlement, making it possible to move value across the world in seconds and unlocking a new era of financial innovation. Some analysts compare XRP's supply management to how OPEC controls oil reserves. OPEC stabilizes oil prices by adjusting production. Ripple could, in theory, manage XRP's supply for stability. Ripple holds much of XRP in escrow, releasing it monthly, potentially smoothing out volatility. This could shift XRP from a speculative asset to a stable utility for global payments. Predictable supply could make XRP more attractive for institutions needing reliability. While not official policy, this theory reframes Ripple's large holdings as a tool for stability. It suggests a future where digital assets are managed with the same strategic foresight as vital commodities. The goal: a more stable, dependable global financial system. Before tokenizing oil, the XRP ledger is proving itself with gold. Projects like Meld Gold issue tokens backed by real, audited gold, traded seamlessly on XRPL. This success shows the technology can handle complex, real-world assets. Each gold token trade builds trust in the system, paving the way for tokenized oil and other commodities. For investors, it means efficient, low-cost access to gold. For institutions, new collateral and settlement options. Transparent, auditable ledgers reduce fraud and improve market integrity. Once gold is tokenized, expanding to oil becomes a technical, not conceptual, challenge. Gold tokenization is the blueprint for a future where any asset can be traded digitally, with XRP as the bridge. Let's clear up a common myth right away. XRP isn't backed by oil, and there's no credible evidence or official plan suggesting otherwise. The idea that XRP's value is tied to oil is a persistent rumor, but it simply doesn't hold up when you look at the facts. The real connection is much more interesting. XRP's true role is as a bridge currency for tokenized assets, including, but not limited to, oil. It's designed to facilitate instant value transfer between different types of assets, whether that's oil, gold, or digital currencies. Imagine the global financial system as a series of isolated islands, each with its own currency and rules. XRP acts as the universal bridge, connecting these islands and making it possible to move value quickly and efficiently between them. In a world where dollars, yen, oil, and gold are all tokenized and traded digitally, you need a fast, neutral asset to swap between them. XRP fills this role by providing liquidity and speed, making cross-asset trades seamless. With XRP, transactions settle in just seconds, allowing for nearly instant trades across a wide range of assets. This speed is crucial for modern finance, where delays can mean lost opportunities or increased costs. The real value of XRP comes from its utility, its ability to facilitate the exchange of tokenized assets efficiently and securely. It's not about being pegged to oil or any single commodity, but about enabling global liquidity. As more assets and more trades move onto the XRP ledger, the demand for XRP as the underlying settlement infrastructure naturally increases. This network effect is what drives its adoption and relevance. In this sense, XRP is less like a commodity such as oil or gold, and more like the digital plumbing that keeps the world's financial system flowing smoothly and efficiently. Ultimately, the success of XRP depends on the volume and velocity of value moving across its network. The more it's used to connect assets and markets, the more essential it becomes to the future of digital finance. XRP's future faces two big hurdles: regulation and leadership changes, both of which are shaping its journey ahead. The ongoing SEC lawsuit over whether XRP is a security has significantly slowed U.S. adoption and created uncertainty. Regulatory clarity is absolutely essential for banks and institutions to fully embrace and utilize XRP's technology. Meanwhile, Ripple's CTO David Schwartz stepping down marks a pivotal moment for the company's future direction. Leadership changes can signal evolution or uncertainty, both of which impact market perception and investor confidence. Despite these challenges, digital asset adoption is accelerating, with stablecoins and DeFi technology rapidly gaining ground. Major institutions are investing in digital assets, showing growing conviction and confidence in the space. The momentum for financial innovation remains strong, even as XRP continues to navigate its unique obstacles and opportunities. The link between digital assets like XRP and commodities like oil signals a new era in finance. The real story is about how we transfer and measure value in a tokenized world. Tokenization is bringing trillions in assets online, demanding fast, neutral settlement solutions. The value of networks like XRPL will be measured by the economic activity they enable, not just token price. Digital assets will coexist with traditional money, creating a more diverse, accessible financial ecosystem. XRP's potential as a bridge currency is a metaphor for the convergence of old and new economies. The world is moving toward a tokenized, interconnected future. At Crypto Insider, we'll keep tracking this transformation, because the future of money has never been more exciting.